Purchasing a new vehicle versus leasing a car. Comparison of the two popular financing options. It can be difficult to decide between buying and leasing an automobile. On the one hand, purchasing implies larger monthly expenditures, but in the end, you become the owner of an asset, your automobile. In contrast, a lease provides smaller monthly payments and enables you to drive a car that may cost more than you can comfortably afford, but you enter a cycle in which you continue to pay for the car. The rise in leasing won't be slowing down anytime soon because more consumers now choose a lease over a loan than they did a few years ago. With a traditional auto loan, buying a car is quite simple. You take out a loan from a bank, credit union, or other lender and pay back the money on a regular basis for a specified period of years. The interest on the loan is paid in part of each payment, and the remaining funds are used to reduce the loan's principal. The payment increases as the interest rate does. By paying down the loan's principal and accruing equity, you eventually own the vehicle outright. The car can be kept for as long as you'd like and treat it however you see fit. The sole consequences of modification or abuse might be future repair costs and a decreased resale value. Leasing a new car is still an option because car prices are still expensive, more than $49,300 in January 2023, and rising. Experian, one of the credit reporting agencies, notes that as compared to both 2020 and 2021, the percentage of all new cars that are leased fell in the third quarter of 2022. Under a lease, purchasers pay a monthly fee to use a brand new car for a predetermined period of time. The customer must return the car at the end of the lease term, but the payment is frequently cheaper than the monthly cost of financing a new car. Since more individuals than ever work from home, many consumers might not be concerned about a lease's mileage restrictions. Contrarily, many people could discover that they don't use the miles they have purchased. The attractiveness is in the regularity of the payments and ownership costs, no costly repairs while under warranty. A lease offers less freedom than a purchase, and life may be unpredictable. We examine the benefits and drawbacks of each to help you decide which is best for you. Benefits of leasing. Leasing may seem more enticing than buying at first glance. You don't have to pay any principal back, therefore your monthly payments are typically smaller. Rather, you are just borrowing and repaying the difference between the car's initial worth and its residual, its anticipated value at the conclusion of the lease, plus finance fees. The principal benefits of leasing. During the car's most trouble-free years, you drive it. You always operate a late model car that is typically covered by the new car warranty offered by the manufacturer. Even free oil changes and other periodic maintenance may be included in the lease. You are able to drive a more expensive, better equipped car than you may otherwise be able to. The most recent active safety features will be installed in your car. When it's time to move on, you won't have to deal with the headache of selling the automobile or worry about its trade-in value fluctuating. There can be sizable tax benefits for business owners. You simply return the automobile to the dealer at the end. Negative aspects of leasing. Despite how alluring a lease may seem, there are several drawbacks. Because you're paying for the car at a period when it's depreciating the fastest, leasing frequently ends up costing you more than a comparable loan. If you keep leasing cars one after the other, your monthly payments will never end. In contrast, a car's worth increases the longer you keep it once the loan is paid off. The cheapest way to drive is to acquire an automobile and keep it until it becomes unprofitable to fix it. Leasing agreements stipulate a cap on the amount of miles. You will be charged extra mileage fees if you exceed that cap. For each additional mile, this can be anywhere from 10 cents to as much as 50 cents. So make careful to figure out how far you're going to drive. Unused miles are not credited to your account. If you don't keep the car in good shape, you'll be charged for excessive wear and tear when you turn it in. Hence, be ready to pay more if your children have a penchant for making a mess with their markers or if you tend to attract parking lot dents and dings. It could cost you if you decide you don't like the car or if you can't make the payments. If you break your lease early, you'll likely be hit with thousands of dollars in fines and early termination costs, which will all be due at once. These fees can be equivalent to the whole cost of the lease throughout its entire tenure. With a few exclusions, such expert window tinting, you must return the vehicle in as it left the dealership condition, free of normal wear and tear and set up similarly to how it was when you leased it. Expendable things like tires, which might be more expensive to replace on a better equipped vehicle with premium wheels, are still your responsibility. When you return the car at the conclusion of the lease, you might have to pay a fee. An alternative to long car loans. To obtain a cheaper monthly payment, some automobile purchasers choose to take out longer car loans of 6 to 8 years. However, lengthy loans might be dangerous, so for these purchasers, leasing may be a better choice. Longer loans make it simple to go upside down owing more than the car is worth, and remain there for a very long period. The trade-in, resale, or insurance value of the vehicle is probably less than what you still owe if you need to get rid of it sooner than expected, or if it is destroyed or stolen. If you wanted to drive a new automobile every few years, taking out a loan to purchase a car is not the best option. You would be better off leasing if you took out long-term loans and traded them in early, because you would end up paying so much more in interest charges than in principal. You can frequently refinance the amount you still owe on an upside-down loan if you are unable to make up the difference. The new car and the remaining balance of your previous car are ultimately financed, nevertheless. Leasing can be worth the extra expense if your objective is to make small monthly payments and drive a new car every few years with little difficulty. Just make sure you're willing to put up with all the restrictions on mileage, wear and tear, and the like. Comparing car loans and leases is challenging. It is challenging to fairly compare, for example, a 6-year loan and a typical 3-year lease. The bank borrower still has 3 years of payments remaining when the lease expires, but the lessee must find another vehicle or, in some cases, accept the lease's buyout option. Another option for financing a lease is to subvent it. The automaker can lower the residual, add an additional rebate reserved only for lease deals, or do both. Also, an automaker may include additional rebates in a lease agreement that a customer of a loan would not receive. Also, it may not be practical to compare leases and loans on an apples-to-apples basis because the money element, interest rate, on a lease may differ from the interest rate offered on a loan. On general, 2 consecutive 3-year leases will be thousands of dollars more expensive than purchasing and keeping a car for the same 6-year term, either with a loan or with cash. Even after accounting for anticipated maintenance and repairs, the savings for automobile owners rise if they keep the vehicle for, say, 3 more years for a total of 9 years. If the restrictions of a lease turn you off, think about purchasing a less costly new car, a well-kept used automobile, such as a certified pre-owned car from a franchised dealer, or obtaining a longer loan term. Choose a car that retains value well, is dependable, and gets decent fuel economy to save money whether you pay cash, borrow money, or lease a new vehicle. Buy used to save money up front and over time. Also use cash. Never forget to bargain. A common misconception is that the monthly cost listed in a leasing advertisement is unchangeable. Yet, that sum can be predicated on the manufacturer's suggested retail price, which is negotiable just like the purchase price of the car. But keep in mind that the finest leasing offers are only accessible to individuals with excellent credit, and that they might only be inexpensive because the carmaker is attempting to clear the decks of vehicles that aren't selling well.